Gold has now rallied for 3 straight weeks in a row, but is now hitting resistance. With Friday closing at $4,880, it is still to challenge the psychological barrier at $5,000. The question is whether it will continue to find strength or fade away from this level as it has done the last 4 times it was around this price. This has been a bullish week across the board on the financial markets as global tensions ease. Welcome back to our Bitcoin, crypto, gold channel. Bitcoin, crypto, and gold are creating some of the biggest wealth opportunities of our generation. This channel is dedicated to helping you find them. We do this using our 20-year structured approach, macro analysis to understand where we are in the global cycle, technical analysis to read market structure and price action, and then identifying the high-probability investment opportunities that align with both. If you want our multi-time frame analysis delivered straight to your inbox, join our free newsletter. It is usually a quick 5-minute read. The link is above and in the description. We first will look at market structure from a higher time frame perspective. The yearly is telling us we are firmly in an uptrend, with the last swing low on 3rd November 2022 at 1643. The monthly is still in its corrective phase, with a current low of $4,100 made on 23rd March 2026. As long as this holds, this is a major structural low, in an uptrend. The weekly has no clear direction. Whilst there has been some strong directional moves, they have been met with equally strong counter-moves. What we can see is from the 2nd March high, $5,434, to the 23rd March low at $4,100, the 3-week upside move is just a rally. The range between the psychological $5,000 to, let's call it $4,000, is where the tussle for control is occurring between bulls and bears, and we are currently testing that $5,000 level. From a Fibonacci perspective, gold is hitting its head at the Fibonacci resistance zone between $4,856 and $4,863. Looking closely, we see price was rejected at this level 4 times on 8th, 14th, 15th, and 16th of April, at highs of $4,888, $4,870, $4,895, and $4,861 respectively. Friday's high is now the 5th and best attempt to break through at a high of $4,918. Whilst this has penetrated through our resistance zone, we will see on Monday and next week if there is follow-through on the upside before we remove it. In our last gold analysis, we mentioned that the yearly midpoint is the pivotal level in the current gold chart and to watch it closely. Price action closing firmly above $4,863 is positive for the bulls. Price action closing below this pivot level bodes well for the bears. The daily swing pattern continues to show higher highs on 8th, 15th, and 17th of April and higher lows on 26th March and 13th April. So until proven otherwise, the bulls currently have the upper hand. So the immediate question is if this Fibonacci resistance can hold the price down, or will it break through to our next Fibonacci zone above between $5,115 and $5,143. It then has the possibility of challenging the structural high on 10th March at $5,429. This would be a strong bullish move. Our Fibonacci support zone is between $4,209 and $4,218. From the 23rd March low, the daily upside ranges are staying consistent. The first swing up was $501. The next swing is slightly higher at $540. If we see expanding upside ranges and a break toward $5,000, that confirms the daily uptrend is resuming. Now let's look at XAUBTC, gold priced in Bitcoin, because this chart tells us something the individual charts cannot. The XAUBTC perspective shows us which of the two assets is stronger at any given moment. Sometimes gold is stronger. Other times they move together as correlated hard assets responding to the same macro forces. Right now they are diverging. Gold is pushing lower while Bitcoin is pushing higher. When applying the regression line tool from the 14th August 2025 to the current price action, we see gold has broken through the bottom. Is this an indication of it being oversold or further downside? The swing structure, for now, is bearish. We will now turn our attention to the macro picture, and the dominant news is on oil. Iran says the Straits of Hormuz is now fully open. Taking a look at the crude oil chart, we see the descent from $118 to its current price of $82.59. The daily swing structure is bearish as oil prices stabilize. The equities market, on hearing this news, has had a very strong relief rally, breaking two major structural highs at $26,299 on 30th October 2025 and $26,349 on 28th January 2026. It is now sitting at new all-time highs, closing at $26,825.50. The dollar index has gapped down, closing at 98.22. Bitcoin, being highly correlated with the Nasdaq 100, has also rallied, hitting a high on Saturday at $78,333. As of April 19, 2026, the Bank of Japan has not made an official announcement to raise interest rates to 1% in June. However, recent information suggests a rate increase to 1% by the end of June 2026 is highly expected. In summing up, the week ending April 17, 2026 saw global financial markets experience a dramatic risk-on rally, driven by easing geopolitical tensions in the Middle East and strong corporate earnings. Major stock indexes hit record highs, reversing previous week's losses as a ceasefire lowered energy price fears. Oil experienced a sharp reversal, pulling back from highs as the U.S.-Iran ceasefire eased concerns over the Strait of Hormuz. Gold held firm near $4,800 an ounce, supported by a softer dollar and continued safe haven demand despite the de-escalation. A 10-day ceasefire between Israel and Hezbollah, following a U.S.-brokered deal, acted as the primary market catalyst, reducing immediate panic, although the situation remains precarious. The overall theme was a transition from panic to cautious optimism, with high sensitivity to continued diplomatic developments. For next week on gold, we are watching the $5,000 level. Before you go, join our free newsletter aimed at Bitcoin, crypto, and gold investors. The newsletter covers everything you need to know to make rational, balanced investment decisions in Bitcoin, crypto, and gold. It usually is a 5-minute read. The link is below and in the description. Subscribe to Bitcoin Capital Gold and hit the notification bell. Thank you for watching. We'll see you in the next video.